Good evening, everyone. Welcome to Closing Comments here on October 28th. Let's jump right into our charts and see what happened across the markets today. First up, we got our December live cattle on the board. We did see this live cattle market begin to slow the bleeding a little bit here today as this December contract traded inside that prior day's range and finished the day almost unchanged. This market balancing out here, seeing the first kind of signs of order and balance here down here in between this 225 to 229 mark. Today only trading in about a $4 range as this market is looking to stabilize. This isn't something we're going to jump in front of here at the moment as we are still trading in bearish territory down here below these prior month lows and below these declining moving averages. At the moment, we're going to see a little bit more structure here come from this market before we start to commit to any potential rebounds. At the moment, we encourage everyone to remain defensive and use a cautious approach here throughout the rest of the week. We could see these wide ranges continue. If we get continued offers down here below 225, we could see this thing make another run down here towards 220. So we're not necessarily out of the woods here yet, but this is a good first step in potentially recovering as this market is beginning to stabilize. Like I said, though, I encourage everyone to remain defensive here as this market sorts through this recent sell-off. We'll wait and see for a better opportunity going forward to see if this market can recover, but at the moment we are seeing the good first signs of it. These back months in this live cattle market, we did see some of these spring and early summer 2026 contract months finishing the day slightly positive. Few of these markets did undercut that prior day's low, but nice balance action here as this market is beginning to stabilize. It looks here a little bit in the near term. This thing's just kind of hitting some oversold levels, so not necessarily out of the woods, but good first sign of slowing the bleeding here at the moment. So we continue to monitor the situation throughout the rest of the week. But like I said, continue to be cautious here over the next few days. Next up, we got our January feeders on the board. Had another gap and go action here today as this market broke down and tested the 320 level. We did see some of these back months out here hitting another limit down day, but kind of coming off of them there into the close, which was a good first sign. We did have probably record volume here at the moment with this front month trading over 33,000 lots today in this feeder market. Definitely some of the highest volume I've ever seen here in the feeder market. So that's something that you usually kind of see kind of in a climax situation here. So this could be a potential balance point here as well for this feeder market. But we are still continuing to trade in these really wide ranges. The fact that we did test the limit down today continues to tell us that we're still not out of the woods, and we still do remain in bearish territory here at the moment. But with this big sell-off we've seen, we could be approaching some oversold levels and see this thing start to stabilize. Look for the wide ranges and volatility to stick around here in the near term. This market still going to be pretty choppy and messy here while it digests this big breakdown. But at the moment, we could be seeing a few signs of these cattle markets stabilizing. But let's continue to remain cautious, not jump in front of this thing as it's seeing this big breakdown. And we encourage everyone to remain cautious and continue to monitor this market throughout the rest of the week, see if we can get some sort of recovery to come from here in the next couple weeks or a month to come. Jumping over to the December corn futures now, we did see a nice little breakout above these range highs, finally getting that gap closed from the 4th of July weekend. This market breaking out right up to a high of the day, coming in up here at 436. So nice little breakout, closing that gap, finishing the day with a close above these prior swing highs and above that 430 level. Looking like we could get a confirmed breakout here. We just want to make sure that we did see this thing kind of come back up off of those highs here into the close. So we'd like to see the bulls take some of this early momentum and push it into tomorrow's session to really kickstart this new uptrend that we could potentially be seeing. But at the moment, with this close above 430, we are going to continue to assume that with this breakout, we could see some new highs here as this market is going to start heading back up here towards this 450 mark and start to test this range we traded in back here throughout the spring and early summer months. So now that we're trading back above 430, look for that uptrend to start to unfold. However, if we do get close here throughout the rest of the week back below 430, we will be right back into these range-bound conditions. Next up, crude oil prices, seeing their breakdown here. Today we did see prices get a little bit more traction as yesterday did just kind of balance out inside that prior day's range. We did have that overnight breakdown yesterday, but most of the action most of yesterday's action was pretty choppy. So a lot of volume getting built up here and finally saw that bottom give out. And today's action seeing a nice little sell-off here, pushing all the way down towards the $60 mark, briefly undercutting it before finishing the day just slightly above 60. At the moment, though, This market trading back down here below these 20-day moving average. This 20-day moving average, good rejection up there at the 50 and that prior demand zone. Looking like the bears are off and running again. Look for this market to start pressing back down here in towards the mid 50s. First stop is going to be that $59 mark, but beyond that, we could see this thing try and retest that 56 level and see if we can finally get a breakdown below these this current year's lows and see this downtrend start to push down towards that $50 mark. But at the moment, looking like the bears are rolling. Look for this market to continue drifting lower here throughout the rest of the week. Next up, equity markets continue to climb, seeing a good recovery here in the S&P over the last couple of weeks after that big breakdown from the 10th of the month. Today, we just continue to push up into new record highs with a new high printing up there at 69.44 on this December S&P contract. NASDAQ also rolling to new highs. Dow finishing the day kind of off the highs, but nonetheless, we are seeing new all-time highs almost on the daily here in this across these equity indexes. Look for these equity markets to keep on rolling here. We are seeing some major earnings reports across some of the big five components, so look for that to bring in a little bit of volatility here this week throughout the next couple of days. But we expect to see this market continue to grind higher throughout the rest of the year. Stay long and strong here. This market is rolling. We should see the higher prices continue. That's all we got for this evening. Thank you everyone for tuning in. We'll catch you guys tomorrow night.